Hello guys, welcome to another episode. Today we're gonna see the full market structure course. So stick around at the end of this video. You'll be able how to trade with market structure, how to follow the trend while you're trading. So watch and stick around up the end of this video, right guys? So we're gonna see what is market structure in trading and how to identify bullish and bearish market structures in trading, guys, right? So just stick around at the end of this video. You'll be able to learn many things, guys. Actually, market structure it acts as a guide for understanding upward, downward and sideways trends, right? So the same principle can be used in any type of markets because we have different type of markets. We have stocks, we have futures, we have forex and commodities, right? So it can be followed. So here we're gonna see what is market structure, why is market structure important in trading, and how to use market structure and which assets work best with market structure, and actually the best time frames to identify market structure, right? So and I'll be able to show you like the examples in trading setups using market structure. So first of all, market structure, as we've said, that is the framework or the structure that any given market is currently trading in, right? So market structure can help you identify or understand the behavior, condition and current flow of the market, right? Current flow of the market. It highlights the support and resistance levels, those swing highs and swing lows, right? So we have different types of market structure. They are like 3 types of market structure. We have bullish market structure, we have bearish market structure, and sideways market structure, right? So here we're gonna first see what a bullish market structure is, right? So just a bullish market structure is identified by the series of higher highs and higher lows, right? By the series of higher highs, and the trend continues in the same direction until the asset, right, records a lower low, right? So this is what I mean by a bullish market structure, right? So it is just identified by a series of higher high and higher low. Whenever you see the market that is moving like this, so right, so this means this is a bullish market, guys. Okay, so means that is a bullish market. Okay, so what do we mean by higher highs and higher lows, right? So higher highs and higher lows, a higher high, it is formed immediately after the break of the previous high, right? So if we break that high, means this one it is a higher high, and this one, the previous one, it is a higher low, right? In another higher high, right, after breaking this higher high that have been formed, we have formed a new higher high and a new higher low. So this is a bullish market structure. So the market goes like this, right? So this is a bullish market, and that's why we consider a bullish market with a series of higher high, higher lows, higher highs, higher lows, right? So here, as you can see, this is a higher high. Okay, this is a what? This is a higher high. Okay, then down here it is a higher low, right? Down here it is a higher low. Okay, so like that, this is a higher high, this is a higher low. So that is a bullish market. So another type of market we have in, right, it is a bearish market structure. Okay, so and a bearish market structure is just defined by lower lows and the lower highs, right? The price trend continues as long as lower highs are being printed. When lower highs are being printed and higher highs, means we have changed to bullish. But here, the bearish market, it will just be like this until it is violated, right? So the bearish market, it is that just like whenever the market break the previous low, right, means we are still in a bearish market. For example, here, this one, it is a bearish market, guys. All right, so hope you're seeing here, right? This is a bearish market. Why? Because it is just breaking lows, right? The market is just breaking lows, right? So here there was a break over previous low, right? So here there is also break of this low, means we are forming a new lower lows and lower high, right? So now this one up, it is a lower high, right? So this one high, it is a lower high, right? And down here it is a lower low, right? So this one is a lower low, right? So and also the third type of market structure is what we call a sideways market structure. So we can also call it like a consolidating market structure, right? So the horizontal movement of price shown by equal highs and equal lows, right, is called sideways trend, or sometimes defined a top, right? So like what we call by sideways market structure is just like this, right? So equal highs and equal lows. Okay, equal highs and equal lows, right? Equal highs and means if the market is just moving like this, right? If the market is just moving like that, mean it is in the sideways direction, right? Hope you're getting it, right? So here, if you bring your trend line here, you'll see that the market, it is in the sideways direction, right? Equal highs and equal lows, right? Hope you're getting it, guys. So this is the third type of market structure, right? Now this is a higher, right? This is an equal high, actually. Equal high, right? equal low, equal high, equal low. So like that, like that, like that. Like we have seen what is market structure and the types of market structure, right? So here, why is market structure important in trading? So it is important for both new and professional traders since it can influence the liquidity and price action of a market. It's also one of the most commonly used techniques to understand trends, right? So this market structure can help you to understand trend, right? So and also like it can help you to understand or to identify potential reversal points and to get a feel for current market conditions, right? So how to use market structure, right? So how to use market structure? Market structure can help you define if then scenarios, right? If then scenarios, right? For example, if a structure break occurs, then look to get short on the pullback, right? So for example, now if a structure break occurs, means we should be identifying like a pullback. We shall be getting short position. For example, here, if we are having a bullish market, right? If this is our bullish market, right, with series of higher highs and higher lows, and for example, if our market like breaks here, right? If our market breaks here, so if our market is broken like here, if we have been in the bullish trend, then we got it like a break of market structure here, right? Sorry, yeah, if we get a break of market structure in the opposite direction, means here we shall be looking for bearish what? We shall be looking for bearish opportunities. For example, here now the market will turn bearish with a series of lower highs and lower lows, right? So that's how market structure moves, right? And what I want you to know, the trend is always your friend. One of the most popular expressions in trading world, and for a good reason. If you can use market structure to identify trend more often than not, then the price will continue in the same direction going forward, right? So you should always trade with the trend. What do I mean, right? So if your market is bullish, for example, here, as we say, if your market is bullish and is breaking high highs and high lows, what you should do, you should be looking for long positions always. You should be looking for buying opportunities. You shouldn't come and sell these retracements. Rather, you should be looking for buying opportunities whenever the market breaks its structure. You should be looking for what? For bullish opportunities. And in another way, if the market is bearish, you should always be looking for shorty positions or bearish positions, right? So that you trade with the trend. That's what we call trading with a trend, guys, right? So you should always consider trading with a trend because the market will find you in the right direction, right? In order to reverse the trend, means sellers must enter the market. For example, like there's this illustration I showed you. If we are in a bullish trend and we're breaking high highs and high lows, right? To reverse the trend, like to change the market direction, sellers must enter the market. Like here, now sellers entered, right? They broke this structure. Now the trend changed to bearish. So that's what we call like momentum, right? So much like reversing the direction to like so like that, right? So there are some trading patterns we also consider when we are in this market structure. There are some popular trading like patterns like head and shoulders, right? There are inverse head and shoulders and double bottoms and double tops. Those are like some of the popular trading patterns we usually use when we are identifying market structure. For example, there's this head and shoulder, right? Head and shoulder pattern, it is always like it can always be formed in a bullish and a bearish market. For example, when we are in a bullish market, for example, when our market is breaking highs here, right? It's breaking highs, it's making higher highs and higher lows here, which is what we call head and shoulder pattern, right? So we are breaking highs like this. So always the market will come like this, then it will oncoming like for the retracement. Like if it goes for another impulsive move, it will not break a structure, rather it will just do like this, right? So this is what we call a head and shoulder pattern, right? So this is what we call the head and shoulder pattern. So this will be the first leg, second leg, this is the shoulder, right? So and there is what we call the double bottoms, right? There's what we call double bottoms. It's also a reversal pattern, right? So for example, if the market is moving like this, if the market is bullish like this, right, it will make a double bottom. For example, if it is going to make a reversal, right? So if the market, for example, is here, it will always come like this, right? It will always come like this, right? So this is a double bottom, okay? So this is a double bottom, right? This is the double bottom. Always we should wait for the break of this neckline before entering a trade on these double bottom reversal patterns, right? So and also we have double tops. We just reverse this one for the double tops, right? So when the market is in the sorry, that's a double top. For the double bottoms, we just reverse like this one when the market is in the bearish market, right? And also the best time frame to trade market structure, like all time frame, you can identify market structure in all time frame on daily, weekly, H4 and H1 like time frame, right? So let's go to examples and trade setups using market structure. So now we're going to our charts to see the examples and the trade setups using the market structure, right? So guys, always if you come on your charts, right, you shouldn't waste too much time, right? So you should be able to see where the market is trading, right? So like in just only 3 seconds or 5 seconds, you'll be able to see whether to identify the market is bullish or bearish. So for example, if we come to our market here, you will see that this market is bullish. Why? Because when you come here, you will see that there is a break of structure that is a higher high. Okay, so it makes a higher low. Let me show you here, right? This is a higher high. Okay, higher low, higher high means it has broken this. It has broken this one. This high means it has created a new high. Then this is a higher low. This is a higher high, right? This is a higher low, higher high. So when you come to the charts, you must not waste too much time, right? So you can identify market structure in just. So this is what I told you about a bullish market. It's just breaking highs, right? So this is a high, this is a low, it's a high, this is a low. So this is a bullish market. So and also let me show you what a bearish market looks like, how it looks like. So if we come here, you'll be able to see what a bearish market is. Okay. So now if you come here, the bearish market, remember we said it's just a series of lower highs and lower lows, right? So if you come here, this is a lower low, this is a lower high, right? It breaks, this is a lower low, right? A lower high, okay? So this is a lower low, right? A lower high, right? A lower low, okay? So it is just breaking lows, means we are in a bearish market. You shouldn't waste too much time identifying the market trade, right? Like if you feel like confused, you just go to another pair, right? So and also a sideways market, that is like a series of equal highs and equal lows. We can also be able to identify it when we are in the market, right? So I don't know whether we can get a sideways market here. Okay, so for example, maybe if we here, right now, let me say this one here, remember this is H4 time frame, but if you go to lower time frame, you will see it clearly. So if you come there, so and here, so these are equal highs and below they are equal lows. So the market is just trading in this range, right? So this is a ranging market. So if you go to lower time frame, you'll be able to see it very clearly. So that's how we can identify market structure, right? So and also like how do you trade it, right? This one you make a specific video on it. So for example, if you see like for example here a break of market structure, like let me go to this bullish market, right? So if there is a break, of course we have to come to our premium and discount levels, right? So we have for the bullish market, we should always trade in the discount levels. For the bearish one, we have already take the markets or the trades in the premium levels. So for example here, we should always trade when we are in a discount, right? So here there is that trade, it is in discount, means that opportunity we should always take it, right? So it is in discount, so you should always take that opportunity when the market is in discount, guys, right? So we should, that's how we can always take the opportunity with these trendy trending markets, right? So it is just very simple, guys. So hope you've gotten something from this very long video, guys. So thank you for watching, guys. Thank you. If you haven't subscribed, do it down there, share the video, give a like to this video, guys. I love you so much. This is Jimmy. Stay safe and goodbye.